Good evening, everyone. It is my privilege to welcome you all to this insightful webinar on impact of SEBI LODR on corporate governance in India. On behalf of the Corporate Laws and Corporate Governance Committee of ICAI and our chairman, C. Dr. Debashish Mitra, I extend my gratitude to each one of you for joining us today to explore this critical topic that lies at the heart of corporate governance and transparency. The SEBI LODR regulations have been a game changer in ensuring that listed companies adhere to high standards of governance, accountability, and stakeholder engagement. Today's session aims to delve deeper into the impact of these regulations on corporate governance practices in India and discuss their evolving implications for businesses and boards. I would like to give a special and warm welcome to our distinguished speaker, Sri Kuldeep Kothari sir, who has expertise in corporate governance and regulatory frameworks. He's a chartered accountant, a company secretary, an LLB. He's author of books on investors' awareness and financial topics as well. He's also co-author of Compendium of Case Studies on Excellence in Financial Reporting, Commonly Found Errors in Financial Reporting as well. He's also a keynote speaker on various topics, for example, financial reporting frameworks and practices, SEBI LODR, Ind AS, integrated in ESG reporting, etc. Thank you so much, sir, for joining. Your extensive knowledge and practical experience will undoubtedly provide us with valuable perspectives. Before we begin, I would request participants, if they have any query or any questions, please mention in the chat box. We shall be happy to take it towards the end of the session. Once again, thank you for being here with us today. Let's make this opportunity to learn, share, and grow together. Thank you so much, sir, for joining. Over to you.
Thank you, Seema ji, for such a warm and wonderful introduction. Before starting with the formal session, I would like to extend my thanks to the chairman of the committee, past president C. Devashish Mitra ji, and the whole secretariat of the committee, Seema ji, Nisha ma'am, for seamlessly organizing and making sure that there is no obstacles, or I can share, or we can connect with each other and discuss on this very, very important topic, as you have rightly mentioned. Because see, when we let me share my screen so that once you can confirm, then it will be fine. I hope it is visible.
Yes,
properly
it's visible.
Okay. So the today's topic is impact of SEBI LODR on corporate governance. And देखने में it looks like that it is a very it may be a confined topic, but when you go deeper into this, you will find that whatever changes have been brought in SEBI LODR in past 2 years, or probably before that, every change has a logic behind it, and it is going basically in on three main pillars on which the regulator is making changes. First is transparency, second is corporate governance, without any doubt, and third is asymmetry of information. And why we say that corporate governance is such a broad and wider topic, any change which is being made, which felicitates transparent communication, which felicitates disclosure of information which should have been available to all stakeholders, is directly related to and impacts the kind of governance a company is showing, and the kind of transparency a company has in its conduct. And I think in today's world, when we are going global, it is very important that the regulator, as well as from investors' perspective, from stakeholders' perspective, we also look into this. So before discussing directly what all changes were brought in past 2 years, because see, it has been a fair and a smooth ride till 2022, I would say. But in last 2 years, there has been a lot of changes, Seemaji, and you all whosoever is working in this field will be correlating it to what I'm trying to say. It has been a smooth ride till 2022, but post 2022 or 23, there are a lot of changes, transformational changes. There are upside down change in the reporting disclosure related requirements. So from where it all has started, it has started from listing agreement. If you work, or if you know what LODR is all about, it is basically a triparty agreement between the listed entity, between the stock exchange, because the exchange is the only place where you can disseminate information to the stakeholders. Regulator means SEBI is not directly seeking any information from you. There are various regulations under which you are required to designate information, which ultimately moves to the stakeholders, investors, etc. So listing agreement was incorporated into Securities Exchange and Regulation Act (SCRA). The section was Section 21, in which listing agreement was incorporated. And prior to 2015, SEBI LODR, got enacted from September to 2015. But prior to that there was listing agreements for the year for different sort of entities, different agreements for the year. But there was a dire need, though it is what we are talking has become past, but it is very important to know, because until unless we know from where it has started, we'll not be able to dissect into the important and the core part of these regulations and why a change has been made. Because whenever a change is made, like in income tax, like in corporate laws or otherwise, we always tend to discuss what is the rationale behind this change, whether it is going to bring out something better, whether it is going to make the ease of doing business more more smoother, or whether it is going to benefit investors, stakeholders, and the industry at large. So we need to understand from where it has started. It has started from listing agreement. As I told you, in 2000 section 21 of SCRA Act, listing agreement was incorporated, inserted. It is in triparty. It was in triparty agreement between the listed entity, stock exchange, and the regulator being the notional party to this list agreement. But sooner the need was felt that there are too many different regulations, agreements, laws and compliances which were there, and to streamline, consolidate all these things, SEBI came up with a consolidated one-stop solution, SEBI LODR, listing obligation and disclosure requirement. It got enacted in 2015, and since then till 2022 there are changes which are made each and every year as per the need of the market, structure, environment, etc. But the major changes came in 2023, and since then it is an ongoing journey, I would say, because I've been fortunate enough to be part of the study group of CFMIP also, as well as working closely with the regulators, SEBI, and exchanges, etc. So every week we are seeing that two or three, or probably two or three consultation paper coming up. And you might say that it all consultation paper doesn't have a direct impact on each and every listed entity, but every fortnight you will see one or two consultation paper or such change that is going to have a major impact, because the whole thing revolves around why a change has been brought in. We need to understand, SEBI being a sectoral regulator like RBI, SEBI is the topmost regulator for the entities who are listed in stock market, the topmost regulator for the capital market. But we need to understand, we need to dissect, and we need to delve deeper into this fact that if any change is being brought into any regulation, it doesn't mean that it is a one-way communication as it used to be in past. See, when you talk about income tax, because if I assume that all of us who are attending, predominantly they are chartered accountants or working around compliance and regulatory teams of listed entities, or from the auditor side, and maybe company secretaries also, if any one of them are attending this session. So predominantly the whole thing, which is all about, it is about transparency, asymmetry of information, and governance. So we were discussing that what was the backdrop of this whole the cycle of change which has started. The backdrop is that to bring Indian capital markets at par with the global capital markets, I think in which we have come significantly, we have traveled a significant journey, and we are one of the most well regulated capital markets of the world. Like one such example, like BRSR, business responsibility and sustainability reporting, India is one of the few countries where the capital markets have a formalized way of reporting ESG parameters, like the recent changes which came in 2023 and 24. So you were saying that every fortnight there are one or two changes which have or which might have an impact on my entity, if I'm a listed entity, or if I'm advising any listed entity, if I'm an auditor, it might also have an impact. If I'm a secretarial auditor, if I'm a statutory auditor, otherwise also it might have an impact on almost all stakeholders. So The journey, as I told in the beginning, started in 2022, because if there is any change which is to be brought in into any of the regulation, there is a very structured process of the same. First of all, there is an internal discussion and brainstorming which takes place within the regulator, maybe the government. Then there is a consultation paper along with background material. Post that, it moves based on the suggestions, so inputs from the public as well as other stakeholders like ICAI, ICSI, or industry bodies, industry standard forum, which is playing a pivotal role in clarifying new regulations which has come since 2023, and other stakeholders also. Then it moves to the working group makes some recommendation to the board, then board decides, and then the notification comes. So it is a very structured process through which a change is enacted, a change is notified. But we need to understand that it is not the one-way communication as it used to be in past. It has become a two-way communication. And why I'm saying this, when you talk about income tax, you talk about harmonious interpretation of various regulations, and we all are very familiar to this, because predominantly we are chartered accountants, and we have worked our life out, or day in day out in these fields. So we are more familiar with income tax, GST, etc., or other indirect taxes, taxation, to be specific with. So we talk about, when we understand, when we dissect any regulation, law, section, we say that let's take out an harmonious interpretation out of the same. Why I am saying and discussing all these things, it might not seem relevant as of now, until unless we discuss in next 2 hours in detail about SEBI LODR regulations. But why it is important? Because you need to understand that, to understand an listing obligation disclosure requirement, other than the compliance part, in which it is kind of a one-way mechanical communication, in which you are required to upload something on the portal to the exchanges also. Otherwise, there has to be a sustainable, there has to be a practicable and harmonious interpretation of any regulation. One such example, if any one of you are aware that what changes has been brought in past 2 years, you will appreciate that there was a change related to disclosure of market rumors. It is still undergoing some changes. There was a change related to disclosure of material events, disclosure of various litigation disputes, etc. And since, mark my words, you can see previous webinars or wherever we are speaking, I am constantly saying since last 2 years, let's take an harmonious interpretation out of this regulation. If the regulator is saying, it is, even though it is silent, see, probably the driving force behind uploading or making compliance, thinking that we are making compliance by uploading each and everything related to, probably say, tax disputes on the portal to the exchange, disseminating each and everything. The driving force may be that if we don't do so, since the regulation was silent, we might face, or we might get a notice from the regulator. But the answer is no. We are saying from the beginning, the whole process, which has started since beginning of 2023, February 2023, probably, if I'm not wrong, was the first month in which the first amendment came. Then 2023 June, July, then May 24, and then September 24, and so on and so forth. So the concept behind bringing out all these changes, as I said in the beginning, let's make it not 3 pillars, let's make it 4 pillars. One is transparency, that is utmost important. Transparent communication with the stakeholder, transparent corporate governance, asymmetry of information. We'll discuss later on what is asymmetry of information. And the fourth part is materiality. Materiality is something, it is different, I would say. Let's not confuse ourselves with materiality, what used to be in auditing standards. What materiality is for financial figures. Materiality in these listing obligation disclosure requirements is in more holistic word. So materiality, transparency, corporate governance, and asymmetry of information are the four tires, or four wheels of this car, or this vehicle, which is on an ongoing journey. The changes are coming and coming. So we need to understand that let's take harmonious, sustainable, and practicable. Remember these 3 words: harmonious, sustainable, and practicable interpretation of each and every regulation. So we were saying since last 1.5 years, 2 years. That see, materiality is something which is important, and in no case the intention of regulator is that triviality should take over materiality. One such example, which we'll discuss later on in detail in our in the presentation also. See, you go to any exchange's website, BSE or NSE beat, and you go on corporate announcement part and you select regulation 30, or maybe you will see 10, 20, 50, 15, 20, or 25, or more, maybe more than that, communications being made by the listed entity to the stock exchange. And you will find majorly out of these communications, the communications are related to intimation of various tax disputes. See, for example, one of the topmost bank of India is reporting that it has received a notice of rupees 60,000 or rupees 1 lakh for GST. One of the topmost oil and gas producer of the country, I'm not taking names of any companies to be purposefully uploading or reporting that it has received a notice of rupees 10,000 for one of its offices from the municipality for not keeping up with the disposal of waste, etc. practice. Do you think that it is important? In my opinion, in my view, I was of the same view earlier also, and now it has been confirmed by the regulator also, that it is not important. We need to see the materiality part out of that. We need to see the significance out of this. The intention of bringing out all these changes in regulation 30, regulation 27, 15, whatever it is, all regulations, the intention is and was always to make sure that there is symmetrical access of information. There is level playing field between two stakeholders. It should not be the case that I am having a certain set of information which you are not having, and we both are investors, we both are stakeholders in a listed entity. So the main idea was that only, and it has to be seen in that particular view. So whenever a regulation comes, there are 2 3 important things. If you are new to this field also, if you want to understand what is the rationale and why it is being done, and how it is done, what is the thought process behind all these things, you first go. If you are looking at a notification circular which has been enacted, you see the preceding consultation paper or preceding recommendation of the working group, then preceding consultation paper, then preceding background material. So there is a chain in which, if you read all these 3 4 documents, you will be able to understand why these changes were made. So since we have 2 hours and the topic is so vast, so deep, that it can go for 4 5 6 hours, a whole day also. So I'll try to precisely discuss each and everything. And if any one of you has any questions, you can ask in between also. We'll try, if the time permits, or otherwise we'll take question and answer in the last. But I would request that if you have any different views, if you have any questions, do try to post in between the session, because webinars are often termed as monotonous one. They are often termed as one-way communication. So let's make it as an interactive session. I am not here to teach you anything. We are here to discuss, and we are here to navigate the intricacies of SEBI LODR and how everything is connected to corporate governance, how everything is connected to value creation, how everything is connected to sustainable growth of the entity. So having said this, as I told you in the beginning, where it all has started, it has started in 2022 November and then in February 23 there was a consultation paper which was brought in by the regulator. Then 21st February, there was a certain different consultation paper related to corporate governance. Then these regulations were approved by the board on 29th of March 2023. And you remember, note down the next date, which is 14th of June 2023. From the perspective of compliance, it might not have the same level of importance it had last year, because it was relatively new. Companies were into a dilemma, people were into a dilemma, professionals were into a dilemma, what to disclose, what not to disclose, what to do, what not to do. But things have changed. We have traveled a long way. There are some clarification. There are some precedents also, because when it was enacted in June 2023, there was no such precedent. So people were doing according to their own vision, understanding, or maybe were taking in conservative way. So June 2023, the second amendment, SEBI LODR amendment regulation was enacted. Then came the next important date, which is 11th of July 2023. The master circular was updated. And to update you all, recently in November also, you can download it from the website of SEBI. There is an updated version of SEBI LODR. So all the regulations are, you can find those regulations at one place. It will be easy to navigate and understand. Then came 12th of July, where a very significant change we'll discuss. We'll try to discuss in 10-15 minutes in the later part of this presentation. What is BRSR? So till the time I discuss, we come to this topic. I'm leaving this forum open with this question, that what is BRSR in your understanding, and what is value chain? So I have two questions for all of you. What is BRSR and what is value chain? So in July 2023, the framework and assurance framework related to ESG disclosures as well as value chain related, some key changes in BRSR reporting was made. BRSR core was introduced, and it was one of the significant milestone in ESG reporting or sustainability reporting, as the whole world is moving about. India has taken a target of, if I'm not wrong, 2070 2075 to be carbon neutral, but the world is moving up towards sustainability. Everything will revolve around sustainability, because profit has to exist. It is the topmost priority. Bottom line has to be there, but it should exist with purpose, and that is possible also. So in 2023, BRSR core was introduced. Then 17th May, you can note down this date also. And if you wish to download, you can download the relevant notification also. Some more changes related to ease of doing business. As I said, we have traveled a long way from November 22 to we are sitting in November 24. In 2 years, we have traveled a long way, but there was some misconception, lack of understanding, some practical difficulties which I said in the beginning companies were facing. So some notifications, or sorry, some regulations were more detailedly described. Some changes were made to make sure that it doesn't obstruct. See, the purpose of any implication implying any regulation on any entity is not to obstruct the core fundamental of the business. Is to make sure that there is transparent communication with the stakeholders, and all stakeholders are at the same level. Seeing this, SEBI notified some changes in the previously notified changes. Then since then there are few consultation paper or mini consultation paper which has come out in public, and recently concluded SEBI's board meeting in 207th board meeting of SEBI on 30th September. It has come out with certain set of changes which it has in principally approved, though it has not been notified yet. It will be applicable from the date of notification, but in principle it has been agreed that we'll discuss those changes also. They are very important to understand. So the journey is, as I said, the journey is an ongoing journey, and there you will see more and more changes because the need of making these changes, every change has a rationale behind to it, and it was very strongly felt in across the community, across the business community, as well as to make sure that Indian capital markets are at the same forefront and same level with the global markets. And we are one of, as I said in the beginning, we are one of the most well regulated and well markets among across the other capital markets of the world. So the major changes in SEBI LODR were pertaining to some of the changes where shareholder approvals were required. Some of the changes were related to corporate governance. Some of the changes were related to related party transactions. When you say related party transaction, you will recall, if you at any point of time has worked in this field, these changes predominantly, or most of the changes related to related parties were enacted or were made applicable, notified on in 2021 itself, but the date of application was 1st April 2022 and 23. So the majority of the changes which are having an significant impact on the entity as well as the stakeholders were applicable from 1st April 2023, meaning by which FY 23-24 was the first year in which these changes were applicable. So still, if somebody says it is not a new change, still why we will discuss all these changes related to related party, because in maintaining transparency, in maintaining the highest standard of corporate governance, I think related party is one field or one area where there is a certain and there is a urgent need of uh, having clear and transparent disclosure norms. Then there was a change related to market rumor, which I said in the beginning that it is still undergoing change, and it has settled to a level from 1st June 2024. Then some other mandatory disclosures were introduced. Then some changes were related to procedural aspect, like filling of vacancies of KMPs, permanent permanent director permanency, and SMPs, etc. And the major change why it is coming in between all of these changes was related to materiality. It was related to material events, because there was a sense of subjectivity. There was a sense of nature of discretionary judgmental thing while we discussed, while we saw disclosure of material events in past prior to enactment of these changes. There was no quantitative threshold. So there is part A, para of schedule 3, in which some deemed material events were are given, and those material events by nature, by virtue of being given in that part A, they are deemed to be material and they are required to be disclosed. But in some cases, and in many cases, it was seen that there is a sense of subjectivity in which the onus or maybe the discretion or maybe the power was with the board of directors. I'm not saying that all companies were doing it in the wrong way, but there was a need to make an uniform standard for all entities, that if any transaction crosses a certain threshold in terms of the impact, in terms of the impact is in terms of value, directly or indirectly also, it should be disclosed. This the basis of this change was asymmetry of information. So these were the major changes which came in SEBI LODR, and which are still under is still under consideration in this year also. So coming back to the first change, so if you want to remember, you see it as the change of 2 to 5. What is the change of 2 to 5? As I told you in the beginning, that there was no quantitative threshold was previously there for identifying whether an event or whether an transaction is required to be disclosed or disseminated to the investors and stakeholders. So SEBI amended that, and now there is a concept of 2 to 5, where if any certain transaction, we'll discuss how to quantify and how to evaluate the same, it crosses the 2% threshold of your turnover, then it is required to be disclosed. Remember, the 2% is of consolidated financial statement, consolidated turnover. Then if it crosses the 2% of your net worth, so as per the last audited consolidated financial statement, it has to cross 2% of the total net worth, but it should not include any negative net worth, except in the case of arithmetic value of the net worth is negative, meaning by this the net worth is negative. And then the third is 5% of the average absolute value of the profit and loss. And what do you understand by absolute value of profit and loss? Means that if there is a loss, for example, we are standing in 2425, so we'll see 2324, 2022, 2122. So in these 3 years, if I am having a loss in 2022-23, then in that case also, without netting off the same, for example, I am having 100 rupee profit in 2021-22, 100 rupee loss in 2022-23, and 100 rupee profit in 2023-24. So it comes out to be 300, not 200 minus 100. So 5% of the average absolute value of profit and loss has to be seen. But again, there were some questions which were being asked by the industry also. And again, I say, and remember these 3 words, we need to see sustainable, practicable, and harmonious interpretation of any of the regulation, and in this case you can compare two comparables only. So if, for example, if I'm evaluating any event, if I'm evaluating any transaction which has a direct impact on my turnover, so in that case, if I compare it with 2% of my net worth, the answer in yes or no, which I want to get, that whether a event or transaction is required to be disclosed or designated or not, will not be correct in all cases, because the transaction which I'm evaluating has a direct impact on my turnover. It might be a case that it is going to cause a increase or decrease in the turnover, but it might not cause increase and decrease in my net worth, or maybe profit and loss also. Maybe it is going to impact the top line, but not in the same same corresponding manner. It don't have impact on the bottom line as well as the net worth. So if I compare it with these other two parameters, it will not give the correct picture. So you can compare apple with apple, and you can compare two comparables only. That is a very common concept when we when we see financial statement, when we see, read, understand materiality also. So it is very important to understand that if you are evaluating an event for the purpose of making a decision that whether it is required to be disclosed, whether it is not required to be disclosed, you need to see and you need to compare two comparables. If my event has a direct impact on my bottom line, then I should ideally I should compare it with the third arithmetical parameter. If it has a direct impact on my say net worth, for example, and capital uh, expenditure is being undertaken, then you may compare it with the second parameter, and otherwise in the with the first parameter. So first, when you evaluate any material event or information, or to judge whether an event or transaction is a material event or information or not, you need to see whether it falls under the deemed material events as per the para A of part A of schedule 3, or the materiality policy, or as prescribed by the audit committee or the board of the company. If the answer is yes, you need not to go to the step 2, step 3, and step 4. You are out on the first step. If it is a deemed material event, if it is there in your materiality policy, therein there is no discussion, you need to disclose the same. If not so, then comes the subjectivity part. So you need to calculate the quantitative threshold as per the prescribed criteria 2 to 5. Then you need to determine, this is also very important, you need to determine the value or impact in terms, expected impact in terms of value. So there may be a case that a transaction or an event has a direct impact, or it has a quantifiable impact, has a quantifiable number to it, and you may be easily able to compare it with the quantitative threshold that you've calculated in step 2. For example, I am putting up a plant, and I'm putting up a capital expansion plan in place, and there is a capital expansion of say 500 million or $1 billion is going to take place. Then it has a direct value attached to it, and you can very well compare it with the quantitative threshold. But on the other side, if there is an event, for example, a drought has come into it is a natural event. For example, there is a strike which is adversely impacting the manufacturing process, and indefinite strike has taken place. So these things don't have any direct value attached to it, but we need to, the one who is assessing the mortality, one who is working around the mortality metrics, has to assess the expected impact in terms of value. And then we need to come at the step 4. As I said in the beginning, you should compare apple with apple. So if the value or expected impact in terms of value to be compared with the quantitative threshold, and if it crosses the quantitative threshold, then it becomes a material event, material transaction, which is required to be designated to the stakeholders. Second change, which was relevant, more relevant at that time when these regulations were enacted, that is June 2023, was disclosure and identification and disclosure of continuing event and informations. Say, hypothetically, let's take an example that we are sitting or we are standing on 14th of July 2023, and there is an event which is still under process. For example, previously it was not falling within the materiality policy, it was not being prescribed or categorized as an material event or transaction to be designated to the stakeholders by the board or audit committee. But for example, a capital expansion plan, for example, an acquisition plan, for example, an ongoing litigation also, or maybe any dispute with the customer, etc. But there were two primary conditions were there to assess this situation. First condition was that it should not have been disclosed in the past, and second was the second condition that it should be a continuing and a material event. So if there was such any event prior to July 2023, and still also if any event is an ongoing process, then you need to disclose the same. And why we categorically stressed in past 2 years, 1.5 years, that let's not disclose, designate each and everything to the exchange. For example, there is a dispute which is going on in a civil court, or maybe there is a dispute which is going on related to taxation also. We often see that in the balance sheet as well as in contingent liabilities, companies disclose that what all litigations are going on with service tax department, well, VAT department, GST department, income tax department, otherwise also. And it is there in the contingent liability part. You choose, or you choose to disclose the same, that yes, I have received a notice of, for example, a lakh rupee also. There may be a case that the information which I'm designating is material, then in that case this question will not pop up. But in otherwise also, if I disclose anything which is already disclosed, meaning by which is there in my balance sheet, it is presumed that if something is there in balance sheet, it is there in the contingent liability part, it is presumed that it is designated, it is communicated to the stakeholders, and it is not required to be disclosed. Mark my word, it was and it is not required to be disclosed separately to the stakeholders. But once I do the same, once I make a conservative choice of disclosing an event or any dispute or any litigation related transaction, a conservative choice to disclose it irrespective of the fact, the amount attached to it, then it becomes a problem, or it might become a problem to me, because it becomes a continuing information which is required to be disclosed at the specific milestone which will come in this particular dispute, litigation, etc. in future. For example, I have disclosed that I have received a notice of rupee lakh from a GST department, then it will become a continuing material event, because on the first hand I presumed I judge that this particular dispute is required to be litigation is, or the notice is required to be disclosed. So whenever there will be a significant milestone in this particular event or particular dispute, I will be required mandatorily to disclose and designate the same to the stakeholders. So this is very important. So it is required that uh, while disclosing any event, any regulation, any transaction to the stock exchanges, properly, thoroughly evaluate whether it is a material transaction or event which is required to be disclosed. Then these are some examples of disclosure of continuing event. This is a disclosure by Bank of Baroda to to the stakeholders. Previously, on the application of BOB World, there was a ban which was put in place by the regulator, sectoral regulator, Reserve Bank of India, and in May 2024 it was taken away. So it has designated the same to the regulator, to the investors and stakeholders. This is related to an arbitral award of a group company of Adani Enterprises. This is also a part of continuing disclosure. This is also a continuing disclosure related to the previously specified event. These are the few deemed material events, and we'll not discuss purposefully these events because it is there. It was there since last 3, 4, 5 years, and prior to the change in SEBI LODR in 2023 and 24 also it was there. So we'll not discuss these things, but this is required to be discussed. This is required to be discussed, and we need to go a little bit deeper into this, because this has caused some practical problems as well as it has solved some practical problems also. When we say the timelines are being tightened, the timelines are being made stringent, we'll see there are some practical difficulties, because in the amended regulation, in the amendment disclosure requirements, if you want to remember this, like in the case of mortality, there was a rule of 2 to 5. You remember the rule of 12 hours, 24 hours, 30 minutes, 12 hours, and 24 hours. If any information is emanating from within the entity, then the timeline within which it is required to be disclosed, within which it is required to be disclosed, is 24 hours from the time, because these informations are required to be captured in SDD also with the timestamp, structured digital database. Within 24 hours, it is required to be disclosed, disseminated to the exchanges. If it is emanating from outside the entity, so there is a simple test to this. If any information is emanating within the entity, then 24 hours. If it is emanating from outside the entity, for example, any rating change, etc., or any external event, then the timeline is 12 hours. And if it is coming out of a board meeting, if a decision which is coming out of a board meeting, and this particular event or decision which has been taken is may have a significant impact, but it is not there in the deemed material event, then it is required to be disclosed within 30 minutes from the closure of the meeting of board of directors. There was a change which has come into this particular amended regulation, I would say, is that from now onwards, if any board meeting is taking place after the business hours, that is 4 p.m., then this 30 minutes will become 3 hours. So, for example, if the board meeting is taking place at 3:15 or 3:30, then the timeline in within which, if it is concluding, it has concluded say on 3:30, then the timeline by 4 I need to disclose these events, designate this particular information, decision, whatever it is, to the exchanges, and through the exchanges to the stakeholders. But if it is concluding after 4 p.m., for example, it has the board meeting concluded around 4:30 or 5, then I will have it 3 hours to disclose or designate the same to the exchanges. But these 30 minutes, 12 hours, and 24 hours without any grace period. It is without any grace period, grace hours, etc., without any considering any holidays. For example, if I am a KMP, or I am the responsible person who is required to disseminate information to the exchange, for example, compliance officer. So if I'm receiving any information on the V hours of, say, Friday, or I've received on Saturday also, then there is no consideration of Saturday, Friday, weekends, etc., without any grace hours, without any grace days. So this timeline is absolute: 24 hours, 12 hours, 30 minutes, and 3 hours if the meeting is concluding after the end of business hours, that is 4 p.m. So this has caused significant stress on the reporting teams of the entities, but I think we have we have got along well with these changes, and companies are trying to, and they are doing fairly well in disclosing these things. But why it is related to corporate governance, why it has an impact on corporate governance, go back to the beginning where we discussed that there are four wheels of this um, particular car, particular, you would say, the journey of SEBI LODR. One is transparency, second is corporate governance, third is asymmetry of information, and fourth is materiality. So it has a direct impact on asymmetry of information, because, for example, there is a happened. For example, the event is going to might have impact on the price of the script or price of the security, or might have an impact of on the profit of the for example, the well-being of the company also. But if it is not quickly disseminated within the stipulated time, there may be a case that it is not the level playing field. There may be a case that there is a asymmetry of information. I am the insider, I have the information, but as previously this 12-hour timeline was not there, so I might be 12 hours ahead, or maybe say 24 hours ahead of some other person who should have been under the possession of this information, being the stakeholder or investor of that particular company. So it has played a vital role in transferring how corporate governance is being shaped in the realm of these new updated, amended, or whatever you call stringent timelines or stringent disclosure requirements. It has, to a certain level, made sure that there is level playing field within various stakeholders, and there is no if there is any delay in the given timeline, then it is required to be explained. It is not the case that if there is a timeline and I can get away by simply writing that due to xyz normal reason, it has skipped, there has to be a justifiable reason which is required to be given, an explanation which is required to be given for the delay. These are some of the following example, uh, which shows that how companies are following the timelines. This particular snippet is related to Reliance Industries. This is related to one of the topmost bank of country. This one change which we will discuss, because but it has, since it has come on the screen, it related to presentation and audio video transcript, if the company is capturing of the investor con call. So now onwards it is required that it is required, if there is any investor conference call, so 48 hours, that is 2 day prior notice is required to be given for the investor con call. So if anybody is interested to attend the same, that person can attend the same. And post 24 hours of that particular investor con call, the audio transcript or maybe the transcript in the word format or the presentation itself is required to be uploaded on the exchange, required to be disseminated on the exchange, to make sure that if I missed anything and the investor con call has some sort of direction given by the management in which it is going to have an impact on this company or impact on the price of the shares of the company. So I am on the same level playing field. So this was a very welcome change, and companies are following it in the right spirit also. Then if there is any change in KMP of the company, change, for example, change in board of directors, for example, change in compliance officer, for example, change in CFO, for example, change in any of the SMP, then it is required to be disseminated. This is one such example uh, of the FMCG major, in which it has communicated the share purchase agreement within the timeline which was prescribed. One example is of the topmost PSU bank, public sector bank of the country, State Bank of India. This is change in rating or maybe updation of the rating. So following the same, as I told you in the beginning, there was the third milestone in this journey of change in SEBI LODR regulations related requirement, or strengthening the corporate governance structure of Indian capital market. There was a change which was brought in on 17th of July 2000, sorry, 17th of May 2024, where for the ease of doing business as well as for harmonization of timelines. So previously, if the company is conducting any board meeting, it is directly related to the corporate governance issue of the company also. If it is conducting any board meeting, for example, for the purpose of declaring dividend, for example, for the purpose of buyback, etc., then the timeline was 2 days. If it was it was required to conduct a board meeting for intimation of financial result, then the timeline was at least 5 days in advance. If it was related to alteration in any form or nature of the securities right attached to securities, maybe NCDs, maybe preferential shares, etc., then the maybe bonds also, then the timeline was 11 working days. Now these all disclosure related different timelines were harmonized, and they at a symmetrical or a balanced 2 working days. That it says, the regulation says at least 2 working days. So if any of these actions are required to be taken, will be taken in the upcoming board meeting, then at least in 2 working days prior to that board meeting, it is required to be disseminated to the stock exchange. So this is one aspect in which, for ease of doing business as well as making sure that there are not too many regulations. So with due respect, what has happened with, say, GST, I always say when I take these sessions, it started from transformation from VAT to GST. So previously, in the beginning, there was GSTR 3B, which is related, which was GSTR 3, which was an comprehensive return. Then one was related to disclosure of sales, two was related to disclosure of purchases, and hence so on and so forth. It was introduced. Now there are more than hundreds of changes which has come, and now we are moving like in circle, and now we are going towards where we were in the beginning, in the VAT era, there was a case in which if I am a seller, I am uploading my invoices on the exchange, on the portal, and if I am the buyer, I just need to, at the end of quarter or whatever frequency of filing was there, I was given an option to simply refresh and see whether the invoices which I have considered as my purchase are being uploaded by my supplier or not. So the same thing might happen with the LODR regulations, because too many changes are coming on account of ease of doing business, on account of transparency, on account of strengthening the corporate governance structure of the capital market or the listed entities. So some harmonization, some symmetrical changes are also required, and this change was one of the same change in which this, in spite of having too many different requirements for intimation of board meetings, common requirement of 2 days was introduced. So now we discussed in the beginning also, if there is any regulatory action or disclosure related requirement, and if there is any regulatory action initiated on the company, party number one, if on the company or on the KMP, for example, director, senior management, promoter, subsidiary, etc., then what is the timeline? The timeline was 24 hours. We'll discuss. This timeline has also been, eased out in the recent board meeting held on 30th September. So the timeline was 24 hours. And why it was required? For example, the things which I mentioned on the screen are just, the list is not exhaustive. It isn't just an indicative list. Maybe suspension, imposition of fine and penalty, some sort of debarment, some sort of closure of operation, some sort of sections, warrants, etc. For example, in case of pharma companies, warnings and warnings or maybe cautions are issued by the FDI or any other sectoral regulator, etc. One such example. So the timeline was 24 hours, but it was felt, and it was a practical requirement also, that if any of these regulatory actions are being initiated on the company, if any of these things or situations are there in front of the company, it requires an substantial or it requires an balanced amount of time to assess and analyze what is the impact, whether it is going to cause a significant impact, whether it is going to hamper the company's situation, whether it is going to impact the company's situation in an adverse way or positive way, whatever ways. So this change has been brought in, has been recommended by the board, and will be notified very soon. So until it is notified, the timeline is 24 hours. See, the thing which I discussed in the beginning, that let's not somebody will say कि आपने पहले बोला था कि let's disclose any dispute, litigation or tax related incident only if it is material, only if it is significant. The answer is still yes. But if there is any regulatory action, maybe by the sectoral regulator, say RBI in case of banks, say IRDA in case of insurance companies, say RBI in case of non NBFCs, etc. So in these cases or otherwise also, any such things have taken place in respect of the company as well as the directors, KMPs, promoters. Then the timeline until, if it is required to be disclosed, there are two things. First of all, if it is required to be disclosed, as of now, until this gets notified, there is no exclusion to this. So if you go by the literal interpretation, the answer is yes, you need to disclose each and everything related to these sort of disputes. But if you go by the harmonious, sustainable, as well as the practicable interpretation of the statute, then in that case, you are required to disclose something which is significant, something which is material. So the first stage is that it is required to be disclosed. I've identified that, yes. Then the second stage is that if it is a material event which is required to be disclosed, and it passes the materiality threshold or materiality test, then in that case also, if I am to give in detailed dissemination, detailed disclosure to the stakeholders, it requires appropriate amount of time also. So for this purpose, these 24 hours has been extended to 72 hours in the recently concluded, proposed to be extended to 72 hours in the recently concluded SEBI board meeting. So these are the some timelines. If any fraud, defaults of the employee of the listed entity which has or may have impact on the listed entity, the timeline is 24 hours. litigation disputes, etc., the outcome of which may have an impact on the listed entity 24 hours. Again, the concept of materiality is required to be seen. If there is a delay in default in the payment of fine, penalties, etc., due to any regulatory, statutory enforcement, judicial authority. For example, we all, because it was in the news and it is still in the news for a larger amount of time. AGR dues related to telco sector, related to telecom companies in India, spectrum dues. So, for example, if there is a delay in payment of spectrum dues, if there is a delay in payment of spectrum dues, or some AGR dues, etc., and if the telecom company is not able to pay the same on time, irrespective of the fact there is a penalty or fine attached to this, or in penalty or fine is levied on the company or not, within 24 hours of passing such due date or due time, it is required to be designated to the stakeholders. Then if there is any agreement, loan agreement or other any agreement which are binding in nature, previously it was open ended, but now it says that which are binding in nature and not in normal course of business, then then in that case, depending upon the type of agreement, depending upon from where it is emanating, the timeline is 12 hours and 24 hours. Let us take an example why it was very important, and it is very important. For example, if you take the harmonious interpretation out of the same, you will understand if there is any agreement, whether it is being taken, it has taken place between me, for example, I am a KMP of the entity or promoter of the entity, and between party B, which is also a KMP, and the company is not party to this agreement, even if the same is happening, but it has in binding impact on the entity. For example, a share transfer agreement, a succession, a succession, deed being formalized or being approved, etc. So in that case, the company is not party to this, but this particular event will have a binding nature of impact and on the control as well as on the on the functioning of the company. So in that case, it is required to disclose. But if you say whether I'll be required to disclose each and every agreement, if it is in the normal course of business, because if you are running a big entity or a small entity also, there are hundreds of agreements which take place in the routine course of business. The answer is no, they all are excluded. For example, I am approving some new product launch. For example, I am approving some new distributors. For example, I am entering into an agreement to purchase raw material. For example, I am giving a letter of intent, letter of acceptance to any supplier, or to any buyer, or to any other party also. Then in that case, it is not required to disclose if it is in the normal course of the business. Otherwise, it is required to be disclosed. These are some practical examples, and the question which I want to pose, whether, as I discussed in the beginning, whether it is material or not. For a bank like HDFC, I would say even 2 crore rupee notice is not relevant. It is not material for a bank like HDFC. Do you think that a penalty of 14 lakhs, a penalty of 2 lakhs, a penalty of 2 lakhs is important, is relevant? It may be important for the purpose of compliance, but do you think that the intention of the regulator was as such that I start disclosing each and everything? And that is where the need of clarification, which has rightly came in the recently concluded board meeting, was there, that let's not make a case that materiality has been and is taken over by triviality. Each and everything is designated to the stock exchanges, and in having said this, in this process, in due course of disclosing each and everything, I lose out on important thing, material thing, and there may be a case that I'm an investor and I'm interested into knowing the fact that what all material events and transactions which are disclosed by the entity. But when I go to the corporate announcement page, I select a filter of regulation 30, and मैंने शुरू के 5 7 10 देखे, and I see यार ये तो all are related to GST, income tax, etc., any municipal corporation notice, etc. Maybe there may be a case that at the serial number 11th there was a information which was really important for me, but मैं क्या करूंगा, I will lose the intent, and as well as this material information will be buried in the way of all these other informations which were not material in the real and practicable sense. These are the few example within question whether these are material or not, because when we disclose or when we assume that if there is anything which is required to be disclosed, any event which is required to be even considered to be disclosed, then we need to make sure that we understand the nitty-gritty of the same, and we understand that it is an event which crosses the relevant threshold. It has a significant impact, and if it is not disclosed to the investors and stakeholders, it might, the investor or the stakeholder might take a different decision related to the company had it been available to him or her or to institution or not. So these are some example. There was a the time was there to reassess, and it has been reassessed to a certain extent. We discussed the same. Now, before moving on to the summary part of what all changes recently have come and proposed to be there, it is very interesting. So why mainstream media? You will say ki we are discussing SEBI LODR, we are discussing corporate governance, but why mainstream media? Because there was a very major change which is still undergoing, undergoing consideration, as well as various sort of interpretations are being taken now. The dust has settled to a certain extent after a detailed note was published by industry standard forum on as to how a market rumor is required to be considered, how a market rumor was required to be disclosed. But let me take you to the time of 2023 June, when previously, though it was deferred, the application of the same was deferred to 1st June 2024. Still, there was a hell lot of dilemma which was there in the mind of compliance professional, which was there in the mind of corporate reporting teams of the entities, which was there in the mind of companies as well as the other persons also, that what will be required to be disclosed, why a market rumor is, what is this, why a rumor word has come into place on the first instance. So let us understand why this change was brought into place. See, we are living in a digital world. We are living in a world where my decision as an investor, my decision as stakeholder might be inspired or might be driven by any such information which is there in the social media, which is there in the common platform, which is there in the market. There may be a case that it is correct, and there may be a better case, or maybe more chances are there that it is not correct and it has been deliberately flooded into the market. Maybe I'm not saying that it is being done by the companies, maybe by some other persons who has some sort of personal interest on this. So this was there was a dire need to take care of all these rumor related things. For example, all of sudden, uh, I am an investor, I am a stakeholder in A Limited, and then all of sudden, I read a news in the newspaper. I see a news on the national media, whatever news channels or social media, that a company has received a massive notice, or a massive crackdown in terms of regulatory action by a foreign regulator or a foreign exchange or a foreign court, etc. There might be a case that the information is not correct. There might be a case the information is correct. But what would happen? See, the price will tumble down in shortest possible time. Price of the security will tumble down. It will go down like this only in that case, or probably otherwise. There is a rumor which has been flooded in the market that A Limited is going to be taken over by a B Limited, which is a very large, maybe Indian entity or large MNC, and the synergy is going to benefit the stakeholders at immensely. So in this case, the price will go up like this. So in both cases, it is not good for the market. The both cases, it is not good for the stakeholders. So then the question which popped up in mind of each and everyone, that if any information is coming out and if it is there in the media, how do I consider it to be a credible information? So they've defined mainstream media for that. Newspaper registered with RNI, whether if you like, before the publication of industry standard forums note, which has helped a lot to the companies as well as the compliance professionals or the reporting teams. But if you read this literally word by word, you will say any newspaper which is registered with RNI will qualify to be a mainstream media. The answer is no. The answer is no, because you will see thousands of newspaper, magazines, journals are registered with RNI, and registration with RNI doesn't make that your newspaper has a wide reach. For example, my total circulation is only 1,000 copies. My total circulation is only 2,000 copies. My total circulation is limited to a city. I would not say city, a part of the city. And whether if I am publishing anything will mandate or will will put a onus on the company that it is required to clarify the same. The answer is no. Then news channels permitted by Ministry of Information and Broadcasting, then social media handles, etc. And if the company has business geographical presence outside India also, then in the newspapers and news channels or social media handles of that particular company, that particular country or that particular geographical area, based on that geographical areas regulation or respective norms. So when we discuss or when we analyze any market rumor, it is first required to be understood whether it is the information. Let's forget rumor. The information or maybe the piece of news which is swimming in the market, which is swimming in the media, is swimming in a mainstream media in practical senses. So if it is a newspaper, it should have decent amount of circulation. It should have direct impact. If it is a social media handle, it should be relevant to business, etc. For example, I am a food blogger. I have 1 million subscribers, and all of a sudden I put an information related to financials of a company on my news channel. In my on my YouTube handle. Will it become information or a piece of news which is there on the mainstream media? The answer, in my understanding, should be no. Some might have a different view to this, but in my understanding, the answer is no. So we need to understand what is mainstream media, and once we understand what is mainstream media, then there is a clear need to define boundaries also. There is a clear need to define what significant market reaction will mean, what material price movement will mean. But maximum of these questions are and have already been answered by the subsequent amendments which took place in 2024 May, then the industry forum note, which we will discuss later on. So we need to discuss and define what is the boundary. Say, if any particular piece of news or rumor crosses that particular boundary, then it becomes eligible to be disclosed. It qualifies for disclosure. So there is a word which is used in the regulation, is material price movement. If any information piece of news is causing material price movement, then the question popped up that what is material price movement. This was clarified in the industry standard forum note, based on the price range of the script and based on the timing also. So based on the timing also, it is a very detailed framework which one should go and read to understand that what will be considered as a material price movement. So see, for example, if a rumor or new piece of news is floating in the market, it doesn't necessarily means that I need to clarify, deny, or confirm the same. It should cause a material price movement. and not only material price movement, there has to be an impending event information related to this particular rumor which is floating in the market. Let us understand. So the words which we need to keep in mind, we need to assess. If there is a news or piece of news, forget that it is let's take an hypothetical example that it qualifies to be disclosed, or it qualifies to be a market rumor on mainstream media. Then my duty or my job is to confirm, deny, or clarify that this news is correct, incorrect. If it is partially correct, or if I want to give a qualitative statement or any management commentary, etc., then I need to do the same. But it should be done, or it is required to be done, if it causes material price movement that we have discussed already, specified by the stock exchanges, to be specified by the stock exchanges. And this rumor has to be of an impending specific event or information related nature. For example, if there is a news which is floating in the market that A Limited is going to acquire B Limited, and if this happens, the production quantity, the production capacity of the newly, consolidated entity will rise to a substantial level that it will have a monopoly in the market. There may be a case that it is correct. If there is any backdrop to this going on in within these two companies, and there may be a case that the discussion has not reached to a level that it becomes an information by nature also to be disclosed to the market, then in that case it will be treated as a rumor which requires clarification, which requires denial if it is not correct, and which requires confirmation also if it is correct. But take another example. If there is a news which is floating in the market that A Limited is going to acquire B Limited, but there is no such talk which is going in the market, and it is purely baseless rumor, then in that case, in my understanding, it is not required to be clarified, because it will not qualify in the definition, qualify the definition of a rumor which is required to be, which is eligible to be disclosed, which is eligible to be confirmed, denied, and clarified. So there has to be preceding or background event or information or transaction which should be there in within the companies or within the parties which are involved in the piece of news which is considered, or which is under consideration to be considered as in market rumor. But all these things are required to be done not lesser than, not in any case, not later than 24 hours of such particular reporting. Now, see, there was a change which was brought in. If there is any event which is going to take place, for example, buyback. If there is an event which is going to take place, for example, OFS. If there is any event which, for example, which is going to take place related to alteration, related to issue of new shares, or related to, for example, bonus, etc. Of example, split of the shares, and in between happening of that event and disclosure of that particular event, in between it, a rumor cracks in into the market, and the price of the particular script either goes upwards or goes downwards. So one might say, and it was a practical problem, that it will have an impact on how the price of that particular buyback transaction or particular office is decided. So SEBI has clarified, if there is a material price movement due to a market rumor, and these type of events are to take place in future or near to that particular event, if it is clarified, confirmed, or denied, if a proper response is given within 24 hours from triggering of that material price movement, in that case, that particular price movement in the price of that particular script will be taken out of consideration while calculating, or while working on the pricing norms related to such transaction, buyback, OFS, for example. So it is a very welcome change, because there might be a case that somebody deliberately will do this, or there might be a case that someone else who is not from the company will do this to take out a favorable benefit out of this, out of a particular rumor. So then, coming straight uh, to what all changes have taken place before we go to sustainability related changes, because I feel that when you talk about corporate governance, impact on corporate governance, remember my words, everything which is changing in the capital markets, everything which makes sure that there is a transparent communication to the stakeholders, there is more transparent disclosure of events and information, there is some stringent timelines, everything is directly related to corporate governance only. What corporate governance is that transparently, with ethical conduct, and probably in the best interest of the company as well as the stakeholders, the company is being run, the business is being run, and the ultimate purpose of these changes is this only. So mainstream media we have already discussed. I am telling in brief about these changes so we are able to cover other part also. Then the second change which took place was related to uh, which was related to vacancy, filling up of the vacancies of office of directors as well as KMPs. So don't go by regulation 61A, 17, 26, 26A2, etc. There is a unified timeline of 3 months which is allowed for any such vacancy. If it arises, it is required to be filled in within 3 hours. But there was a very welcome change which took place. Maybe it is related to, or maybe it is relevant for the PSUs as well, as where any such change in KMPs, or maybe any such change in KMPs, for example, banks, for example, insurance companies, it requires an thumbs up from the sectoral regulator also. So in that case, the timeline has been increased to 6 months, where any sort of statutory approval, sectoral approval, approval of the sectoral regulator is required for appointment, or for taking up such, filling up such vacancies. And a very welcome change was also proposed, and it is it will be enacted very soon, was that for the time taken for any such approval or procedural things will be eliminated from calculation of those 6 months. So if it is a normal case, then the timeline is 3 months. If it is a case where the appointment or filling up the vacancy of KMP, or board of directors, maybe CMD, CEO, CFO, CS, etc., requires approval of the sectoral regulator, then it is 6 months, and the time taken in such procedural aspects will be taken out of calculation while we calculate 6 months, or 3 months, vice versa. Then we discussed in the beginning, there was a change related to permanency of director. If any director, non-executive director, who is not liable to be retired by rotation, and it has, I'm talking about what has happened, or what happens before 31st March 2024, because this change which was enacted last year is applicable from this current year only, that is 24-25. So if any non-executive director who is not liable to be retired by rotation, in that case, at least in 5 years, at least once in every 5 years, the appointment of that particular director requires ratification of the shareholders in the general meeting of the company. Somebody will say that what was the need of this particular change? So you go back to June 23's notification, you go back to the background material consultation paper, and you will see there was a case related to one of the biggest breweries, or I would say alcohol companies of India, in which one director refused to step down. So maybe if there is any change which is brought in, it has a rationale, it has a precedent due to which it has been introduced. Then there was some changes which was introduced in corporate governance, quarterly corporate governance report, as well as annual corporate governance reports also. If there is any incident which has taken place related to cyber security breach, if there is a incident which has taken place related to loss of data, any such incident, then it is required to be reported uh, along with the quarterly corporate governance reports at the end of each and every quarter. If there is any change in the position of any SMP or KMP from say point 1, that is say to 24 or 23, to point 2, that is 24 or 25, as the case may be, in that case such change has to be explained in the annual corporate governance report along with the annual report. Then there was a change related to BRSR, which we will discuss, which I will try to at least deliberate upon this thing for at least 5-10 minutes, so that you get an fair fair bit of knowledge about what sustainability, ESG reporting, and how it is going to impact the corporate governance of the companies. Then investor meet and analyst meet, we have already discussed. It is required to be reported 2 days in advance, and within 24 hours the transcript is required to be uploaded. Materiality related change we have already discussed. Then it is related to containing event. Then the change is related to strengthening stringent timelines. The change is related to confirmation of market rumors, we have already discussed. Then the change which took place was related to regulation 30 only. So then some changes were there in schedule 3 and schedule 5 also. So these were the brief changes which took place in 2023. Now we'll discuss quickly in next 10 to 15 minutes, we are because we are we the time is moving very fast, and we have a lot to cover. We'll discuss what all what all recommendations or adoptions or in principle approvals were given at the recently concluded board meeting of SEBI on September 24 related to ease of doing business. I would clarify and disclaimer that there are more changes. If you download this particular notification giving synopsis about what all changes were discussed and approved in the board meeting, there are a lot of changes which has taken place, but we'll discuss only some important changes which has a direct impact on ease of doing business. First is unified filing system. Previously, you know, previously, or I would say as of now also, if your entity is listed in BSE NSE, you need to designate each and every report, each and every information to both of the exchanges multiple times. So now this will change, and a unified filing system will take place. So if you push the particular information which is required to be disclosed, it will automatically move to the all the respective stakeholders where it is required to be disclosed. It is a very welcome change. It will reduce the compliance burden. Then there are a lot of periodic filings which are required to be done related to governance, related to related party, related to financial, etc. So previously there was no such categorization. Now these filings will be categorized into two parts. One is governance related filing, and one is related to financial. And these two broader heads or categories will be there when you are going to designate, when you will be designating any information to the stock exchanges and through which to the relevant stakeholders also. Then extended time for board meeting we have already discussed. Then there was a very welcome change which gives a sense that we are moving towards automation also. So if there were any change related to shareholding pattern or credit rating, it was mandatorily manually required to be disclosed by the companies to the stock exchanges. Now the stock exchanges will automatically make a process in which if there is any shareholding pattern or related change, it will reflect, or it will it will be disclosed. It will come on the portal or come on the exchanges website also. So it will also reduce the compliance burden. The next change is related, proposed change is related to, approved change is related to newspaper advertisement. Previously, or as of now, I would say the need is that the companies are mandatorily required to be, you see, if you read business newspaper in the result season, at the end of every quarter, and in annual result season, you see a lot of results are being published in different newspapers, because it is a statutory requirement which is there till now. But if it is the proposed changes, as and when they will be notified, this will be no longer a mandatory requirement. Previously the companies are, or till now the companies are obligated to do the same, but now it will be voluntarily for the companies. If you wish to publish a newspaper, wish to publish your results in the newspaper, then you may do so. If you don't wish, if you feel that it is, since we are living in the digital era and the information is easily available to all other various stakeholders, there will not be no need of doing the same. The next change was related to, major change was related to sustainable finance framework. There was a consultation paper, if we are aware, you should go and read, because sustainable finance, green finance is the future of how the borrowings for a company, how the benefit of leveraging for a company will take place. So in principle, it has been agreed that the regulator will issue specific frameworks for issuance of social bonds, sustainability bonds, sustainability linked bonds also. So globally also, people call it green securities, people call it green bonds, people call it based on the nature of the underlying use. It may be a green bond, it may be for environment purpose, it may be yellow bond for solar energy purpose, it may be a blue or something other bond for the purpose of water related environmental issues. But predominantly they are divided into two parts. One is sustainability bond, which is in which you have an underlying purpose which you define at the beginning. Second is sustainability linked bond, in which you don't define a specific purpose. For example, you are raising say $100 million from the market, for the purpose of a sustainability linked bond, through a sustainability linked bond, specifying that the KPI which you are targeting is reduction of carbon emissions in your manufacturing process by 25% in next 10 years. But you may be allowed to use the proceeds of that particular bond issue in the normal corporate purpose or common purposes of your company. But that KPI which you have linked to this particular bond issue, it will be monitored, will be required. The BRSR is getting amended, so it will be incorporated in the BRSR also. Yes, periodical updates will be required to be given. There will be, in some cases, assurance will be required. In some cases, dissemination of more information will be required, so that the investors as well as the regulator can have a check on whether I'm disclosing a correct KPI. And now the question comes up, why, how it is related to corporate governance. The answer is that if I am raising money for some purpose, be it through normal issuance of securities, be it through a sustainability bond, social bond, etc., then there is an underlying responsibility also, which is entrusted on the company, that it should be utilized in the correct manner. It should not be diverted. The fund should not be diverted, and 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 it should make sure that it is used for the purpose it is being raised. So if I am doing without any mandatory disclosure requirement, then the answer is that I am following the best corporate governance practices. uh, I am following the best corporate governance practices. If I am not doing it voluntarily, because I might say, that, see, this is not required to be disclosed by my company, I will not disclose this information. So it becomes a case of, see, excellence or transparency is way beyond the compliance part. Compliance may be required, compliance may not be required. But what is to be seen when we say excellent reporting practices, when we say excellent corporate governance practices, something, if it is required to be disclosed, then everybody will disclose. Otherwise, it will become in non-compliance. But if it is not required to be disclosed, then my duty is that I should make sure that I am disseminating this information to make and maintain a transparent communication with the stakeholders. So sustainability bonds comes with an underlying purpose. For example, I am raising money for the purpose of water conservation. I'm raising money for the purpose of energy, for the purpose of solar energy, for the purpose of environmental related issues. Then the money is required to be used for that purpose only. But if it is a sustainability linked bond or KPI linked bond, then in that case, the KPI will be tracked, but the money can be used for the other purposes also. So this is what a very welcome change, and so very soon we will see the framework being notified by the regulator. Amended related party disclosure related requirement, which we have discussed, that they are under consideration. Why they are causing problems to the KMPs or to the audit committees of the company? First change is, I think, fair enough, that it includes now promoter or promoter group or of the company, irrespective of the quantum of shareholding. Previously it was 20%. Now if you are part of the promoter group or you are promoter, irrespective of the percentage of shares that you hold, you will be qualified, you will be categorized as a related party to the company. Second change is welcome change, not a bad change, but it has a practical problem attached to this. With effect from, that is, last year, it was applicable in FY 23-24. If any person or entity is holding 10% of the share capital of the company, or more than 10% of the company, either directly or by beneficial interest basis, at any time. See, this word anytime becomes a little bit problematic in practical sense. And let's take an hypothetical example. Generally, I'm not an entity who is holding 10%, or who intend to hold more than 10% or 10% of the entity. But due to some business transaction, due to some sale purchase of the shares and securities on the time, as may be, my shareholding crosses, for example, for a day only, during the 365 days, for a day only it crosses 10%. Then in that case, what will happen? I'll be covered as an related party of that particular entity for all transactions. So it will be difficult for the companies to identify the same. On the other case also, to some extent, it is not practicable. that at any point of time during the year, if I'm crossing 10% threshold, I should be treated as a related party. The representations are made and have been made to the regulator, but is still under consideration. I don't see any possible change in the short period of time. Second was related to the change which is causing a little bit of practical issue also, again, was causing related party of subsidiaries and transactions of related party. For example, if a listed entity or any of its subsidiary on one hand, or related party of the listed entity or any of its subsidiaries on the other hand, a transaction takes place, they all will be uh, they all will be covered under the related party definition, and this causes a certain sense of burden on the audit committees of the holding companies also. Because if I'm sitting in the audit committee of a holding company, if I were to approve a transaction, if I were to approve a transaction of my subsidiary, with the change which we will discuss in the next slide, I am, irrespective of the fact that I'm not required to go in day in day out business of the entity, but forcefully, if I were to examine that a transaction is required to be approved or not by the audit committee of the holding company, the transaction is of the subsidiary company. But since that threshold has been prescribed, the audit committee of the holding company is required to approve the transaction. I will be forced to go in the day-to-day business of the subsidiary company, and this will defeat the very own purpose of independence as well as the compliance, the balance of compliance burden. Then the third change which is there, that if any transaction is taken carried out with any unrelated party, but it benefits any of the related party, so in that case also it will be covered, it will be treated as a related party transaction, it is okay. Then the materiality threshold of 1,000 crore or 10% of the annual consolidated turnover of the company uh, is defined. So if any transaction crosses this threshold, then it requires the approval of the shareholder also. Then if any transaction crosses the 10% threshold of the annual standalone turnover of the company with effect from April 2023, that it is applicable in FY 23, 24, and 24, 25 onwards, then it requires the prior approval of the audit committee of the listed entity. Now the problem lies, if I'm the person who is assessing, who is sitting in the audit committee of the listed entity holding company, I'll be forced to go and check whether a transaction or with the related party of the subsidiary or whatever it is material or not. So these were the few changes which were brought in related party related changes. Now this particular slide or snippet covers the changes which were notified in the 17th May 2024 notification. Market rumor we have already discussed to a reasonable extent. One change which I would like to highlight, that previously, if there was any rumor related to any promoter, director, KMP, the onus was on the company to disclose the same. But my hands were tied. My hands were tied because how do I disclose any information which is not under my control? So now it has been sorted out. The KMP, director, promoter, or the person who is responsible to provide the information to the company is required to provide accurate, timely, and detailed information, accurate, timely, and detailed information to the company. So the company, the listed entity, can designate the same through the stock exchanges within the time frame which is prescribed by the regulator. Then uniform timelines for the board meetings we have already discussed. Then the vacancy time thing we have already discussed. One change which I feel is contrary to what is happening is related to holding of RMC meetings, that is risk management committee meetings of listed entities. The timeline has been increased to 210 days from 180 days, and I feel that it is not in the best interest, it is my personal views, not in the best corporate interest of the corporate governance practices, transparent corporate governance practices. Because in the evolving world, though the risk or mitigation plans or anything material issues which have been identified, though they don't change so frequently, but still in the dynamic world, when the situations outside world is changing so frequently, see, by this change it will mean that the company is not required to hold at least two meetings in a specific financial year, which is I feel that in my personal opinion it is not in the best interest of basis on which all other changes are carried out. So the gap has between two RMC meetings has been increased from 180 days to 210 days. Then the amendment in definition of generally available information in PAT is being taken care of. Then the change related to other changes related to market cap of uh, a listed entity. So this is also very interesting. So why it is very interesting? See, there are certain regulations or certain disclosure requirements which are which are applicable on an entity, which are applicable on an entity only if it crosses a certain threshold of a market capitalization. So, for example, if I'm under the top 1,000 listed entity, I am required to prepare an BRSR report. If I am under within the top 100 listed entities, I would have been put into a bracket where I was required to confirm, deny, or clarify the market rumors from 1st June 2024. For example, if I am under top 250 entities, I will be required until unless modified, I'll be required to report value chain parameters for my value chain partners in the current year's BRSR. So there were certain regulations which were, directly linked to the market capitalization, but there was no uniform basis of which on which these things were decided. It was a common rule that it was a rule that the market capitalization of a entity will be taken as on 31st March. The practical challenge to this was that if my entity's market cap crosses top 1,000, top 500, top 100 to top 250 on the very last day or probably in the month of March, I don't have much time to prepare myself because things doesn't moves like this. See, if my entity falls into top 1,000 and I'm required to prepare a BRSR, if my entity falls into top 150, I was required to take a reasonable assurance on BRSR core last year. For example, if I'm falling within top 250 from December 24, 1st December 2025, I'll be required to report related to market rumors. So what will happen? There has to be a process in place. There has to be a system in place, and the listed entity also needs time to be prepared with these changes. So this has been sorted out now. Now now what will happen on the at the end of every December of financial year, the stock exchanges will publish a list of companies by market capitalization, and and based on the average market cap of 6 months, that is from July 1st to December 31, it will be decided that whether my company should or whether my company should be taken into the top 1,000, top 100, top 250 entities criteria. And I'll be having, by this I'll be having a 3 months clear time to prepare myself, myself mean to say the entity, to put systems and processes in place so that I'm complying not for the purpose of fulfilling ticking a certain checklist, but I'm complying in the right spirit and manner in which it is intended to do. And a major change, which is a very welcome change, that previously there was no sunset clause on such regulation related requirement. So let us understand, if my company falls into the top 1,000 criteria in 2002, 3, 2, 4. So I was, for example, in 2015, 16. So there was no sunset clause. Till eternity, I am required to comply as of now. Previous to this notification, I was, as a listed entity, I was required to comply with all the regulations which were applicable once because my entity crossed a certain threshold of market capitalization. Now there is a sunset clause of 3 years. If, for say, hypothetically, year one, in year one, I have crossed the materiality is I have crossed the market capitalization threshold, and I am required to report certain things. Then, if for next 3 consecutive years I am out of that particular threshold, I'll be relieved from disclosing all these things from the fourth year onwards. So this is a very welcome change in which a sunset clause is introduced. Now a very major change which is proposed, which is proposed and which has been approved by the board in which has been approved by the board related to the definition of connected person. Though my view, probably is different in this. The two changes which the SEBI board approved related to expansion of definition of connected person and immediate relative. In connected person, they said that a firm or its partner or its employee in which a connected person is a partner will be treated as a connected person. I have a different view on this because see, including a journal employee under this disclosure related criteria is not correct in my opinion. It is my personal view, because see, there may be a case there are hundreds of employees, there are thousands of employees in a firm in which a connected person is also a partner. So do I intend to say that each and every person will be treated as a connected person? Maybe the answer is not, but it is giving such a message that the answer is such. So we suggested that let's make it KMP, but now this is how it is. The second is, if any person is sharing the household with the connected person, then I think that it is a fairly brought in change. And third is relative, the replacement of uh, relative in place of immediate relative for a person to be deemed as a connected person. It is in line with the regulatory requirement also. Now, in May also, the regulator issued a consultation paper, and now in the 9th of November 2024, the working group has recommended inclusion of certain events in the definition of UPSI. These changes are basically to make sure that UPSI or other things are in line with the changes which has taken place in Regulation 30. For example, change in rating, for example, fund raising, for example, agreements by whatever name, for example, fraudulent defaults, for example, disputes resolution, restructuring, etc. So these are the basic changes. Now one change, because there is a IPO frenzy which is going on in the market, and this IPO frenzy, we all have seen that recently, I think 2 3 months back, 3 or 4 months back, SME IPO of a company from Delhi attracted bids worth of 5,000 crore in response to a issue size of 12 crore rupees, and the entity was a dealer of a two-wheeler company. I am not saying that it is it is the intent of the company was wrong. It is good. People are saying that there is a liquidity flow in the market, and it is good for the market. But on the other hand, it is required to be seen that the honest investors, or maybe the investors which are not so technically fit, are not lured into these things, and they don't lose their hard-earned money. So there is a basic change. The minimum application size is increased to 2 lakh rupees, which is in line with the normal IPO norms. The minimum allotee size is increased from 50 to 200, proposed to be increased. Now, the OFS in SME IPO is restricted to 20% of the issue size. Not more than 20% of the issue size can be done in form of OFS. Then if the issue size is more than 20 crore rupee, then there will be a monitoring agency. If it is not, then in that case, a certificate from the statutory auditor will be required and will be required to be presented to the board and audit committee of the listed SME entity also. And this certificate will be required until the proceeds are utilized for the purpose given in the DRHP or RHP. Then minimum lock-in period of 5 years for the promoter holding. Then the removal of option of raising fund for unidentified targets. Then removal of repayment of loan to directors or somebody else, promoter group, etc., as an object of an issue. So these are the very welcoming change which will make sure that there are transparent reporting, governance, and disclosure practices in the SME entities also. Now, since we are standing on 5:46, so I would request, if you have any questions till time, you please post your questions in the chat box. Otherwise, I would like to cover, at least for the next 10 minutes, something related to BRSR. So I posed a question in the beginning, that what do we understand by BRSR, and Edmund, do we have some answers on this? Answer on the question that what is BRSR?
On BSR, we don't have, sir, but we have certain questions that I would request you can cover this, and then we can take up the questions.
Yeah, sure. So the change which is related to sustainability reporting is called BRSR, that is Business Responsibility and Sustainability Reporting. Why it is important? Because India is one of the few countries which has a formalized reporting framework for reporting ESG related parameters. And it is the BRSR is more focused on compliance part, whereas integrated reporting, which is also a concept in terms of sustainability or global reporting frameworks, it is more concept more concentrated towards stakeholder engagement, etc. So it started in 2011, where the national voluntary guidelines were issued by MCA. Then there was a report which was required to be given by the companies, top 100 companies, from 2012 to 2019, or say 21, BRR, Business Responsibility and Sustainability Reporting. It predominantly revolved around the amended CSR norms, because Companies Act was overhauled and amended in 2013. So till 2021, the BRR evolved around CSR related requirement, predominantly related to that only. Then in 2017, it is very interesting. You should download and read this, this circular of the regulator SEBI, which talks about implementation of integrated reporting. Voluntary adoption, very tricky language. Voluntary adoption for top 500 listed entities. But in my understanding, if it is not mentioned anywhere, but once you adopt, once you say that you have presented an integrated annual report in compliance with the IARC framework, which is International Integrated Reporting Council, which has merged with Value Reporting Foundation, later on taken over by the IFRS Foundation, and is proposed to be merged with the ISSP, that is International Sustainability Standard Board. So it talked about integrated reporting, it talked about six capital, it talked about BRSR, it talked about ESG. Then the major change came in 2021, which said that BRSR, a new reporting framework, tabular, subjective questions in questionable form, a format was introduced, a framework was introduced, and BRSR was made applicable on top 1,000 listed entity. And in 2023, BRSR core was introduced. Value chain reporting was made applicable to top 250 companies from 2425, as well as the framework of BRSR was revised to include various environmental as well as other key KPIs. To make sure that the ESG reporting or the reporting which is being done in BRSR is holistic. And the major changes which came in Principle 6. So, in brief, in next 2 minutes, I will let you know what is BRSR. So BRSR is basically divided into three parts. First is section A. It is journal disclosure. It talks about journal information of the company, detail of the company, SIN number, etc. Reporting boundary is very important. Point number 13 of section A, which says that you need to define your reporting boundary, whether you are covering consolidated as well as all standalone basis you are preparing BRSR. And then if there is any exclusion, then it is required to be mentioned. Then point number 26 related to material topics is very important. It is one of the most important parts in which you need to identify, assess, disclose, and make sure that all relevant material topics are disclosed in your report, as well as if it is having in financial impact on the company, if it is required to be categorized into opportunity and risk. If it is an opportunity, then it is fine. If it is a risk, then whether it has a negative financial impact or not, then quantitatively as well, not quantitatively, qualitatively, it is required to be disclosed in the table. Then there is section B, which is basically process related disclosure related to various policies, etc. Then there is section C, which is principle based disclosure. There are 9 principles in which the disclosures are being distributed. The most important out of those is principle 6. I would say the most complex out of those is principle 6, because it requires certain complex calculation related to energy emissions, related to water conservation, related to exploitation of water, related to waste also. So previously, before reading this BRSR framework or reading NGRBC, I was under impression कि waste तो दो ही type का होता है. Waste is liquid waste or waste is dry waste, but there are more than 9-10 or more than that type of waste also, and it is required. It is so comprehensive, it is so holistic, and it is complex also on the other hand. So 3 parts: section A, journal disclosure, material topics, reporting boundary, 2 important things. Then section B related to policies, principles, etc. Section C is related to principle based disclosure, out of which section 6 is more important because it requires certain set of complex calculation. So before taking up questions, what are the key hurdles or practical issues which we have faced as a preparer, because we do prepare a lot of BRSR reports for the listed entities. 3 4 issues which I would like to highlight, because one is data integrity and correlation of data. So there may be a case that the intention is not wrong, but in collection of data as well as putting up the data in the right form, right format, and the intended manner is very difficult. It requires meticulous work and coordination between various department of an entity, because there are more than 180 plus quantitative data points inputs which are required to disseminate the information in the intended manner. Then complex calculations we have already discussed related to GHG, that is greenhouse gases emissions, waste and water, energy, etc. And at some places it requires you to give an answer in very precise and prescriptive format. So in that case, it is again become a discretionary thing that if any qualitative answer is required, what do I write in this? So people are getting confused. We have seen that in place of quantitative disclosures where it is mandatory, because BRSI is required to be done in XBRL also, and XBRL doesn't accept any sort of subjective information. So if there is an information which is required to be given in yes or no, companies are writing paragraphs in it. If there is a quantitative information which is required to be given, companies are giving qualitative information. For one such example is assessment of related to value chain partner. People are writing that they are assessing 100% of their value chain partners, which is practically impossible according to my understanding, my reading of the industry. But people are writing, some people are writing qualitative paragraphs that we are doing this and this, not related to value chain things, not related to other quantitative disclosures which are intended by the BSR format. With this, since we are running short of time and we need to take some questions also, I would end by this presentation on this note, and hopefully we'll connect again at some point of time in future, maybe in coming months, to cover the remaining part as well, specifically cover the sustainability related issues which have a direct impact on the transparency, communication, and the corporate governance structure of the companies. So Seemaji, we can take the questions now.
Yes, sir. We have got few questions, so I'll just read out to you.
Sure.
One is, how can technology and digital platform assist companies in meeting LODR compliance requirement, especially for timely and accurate disclosures?
See, this is a very subjective question, but when you talk about technology, there was a requirement of SDD. If we are aware of the same, SDD, structured digital database. So structured digital database is kind of a digital library of events or informations which are going out of the entity. With the timestamp, it is required to be maintained. So we can integrate some sort of AI or some sort of automation related, I would say, add-ons to the particular software that we are using for dissemination information. Because see, it is I understand, if a company like Reliance or a company like Vedanta or a company like HUL or HDFC Bank goes on to do this manually, it will be not possible within the relevant time, like 30 minutes. 30 minutes is fine, 12 hours and 24 hours, it will be very difficult. So integrating generative AI within the structured digital database, making sure that it doesn't deviate from the statutory requirements, may be a possible solution to this problem.
Okay. Another question we have is, basically, this is again very subjective. What is the definition of material price movement?
See, Seemaji, it is not subjective. The material price movement is prescribed by stock exchanges itself. So it says that based on the price of the script, for example, if it is from 0 to 100, the price of the script is from between 0 to 100, the material price movement may be 1%. If it is between 100 to 200, then it may be 3%. If it is between 200s and onwards, then it will be 5%. So it has been already put in place by the exchanges. It has been notified, and it is based, the categorization is based on the price of the script. If the share around which I'm talking, I'm considering whether there is a material price movement or not, I need to see whether it falls into 0 to 100, 100 to 200, and more than 200. Then based on the category, it will be 1, 3, and 5%, and based on the time also at which it is taking place.
Thank you, sir. I think those were the only questions we have from participants. And there's a request from participants. They're asking for sharing this presentation. So I would request you to share the presentation and we will upload this.
Okay.
I would like to, on behalf of the Corporate Laws and Corporate Governance Committee of ICI, I would extend my heartfelt gratitude to all of you for being part of this enlightening session of this webinar. A big thank you to our esteemed speaker, C. Kuldeep Kothari ji, for sharing your invaluable insights and expertise. To all our participants, thank you for your active engagement and thoughtful questions. We will definitely share this presentation with you. Thank you once again, and we look forward to seeing you all at our future events.
Sure.
Thank you so
Sure.
much, sir.
Thank you, Seema ji. Thank you, everyone. Bye.